Okay, folks, welcome to a quick coffee talk. Day 2 of Sober October. Yesterday, I took in about maybe 2/3 of the calories that I would normally do. I'm not the slightest bit hungry. So I'm off to the gym in a couple of minutes, but I did want to roundtable this morning's price action and what we're doing here. So they killed soybeans overnight, and I bought it a little while ago. I posted it in the feed. We're up on it at current. So this is a 15-minute chart. You can see that we have a breakout. They're going to probably pull this back in and do a retest here. And that's fine. It's what we expect. Then we're looking for the follow through. Now, I don't like to get big with futures because they scare the hell out of me. The volatility scares the hell out of me. So, you take a look at soybeans over the past couple of days. I mean, rip your face off, rally, correction, rip your face off, rally, correction. It's very, very volatile. But it looks as though we are, if we can close above 1057, let's call it 1051. It looks as though we may have a rally on our hands here after some selling overnight. So, hey, Seymour Rivers, thank you. So, what do we have fire off here? Natty gas, natural gas pulling back a little bit. I didn't stop out. I booked profits on natural gas because it was very volatile yesterday, as natural gas is, and I would have put up with it. Let's go take a look at that. And if you're catching this on the replay on Twitter or wherever, you may want to use the link below. Is it below? Yeah, I think below on so you can get this live in our forum. Okay. So sign up, it's free, and it won't be free for much longer. I wanted to go to natural gas. So natural gas, and by the way, our stop is right here under the pre-market lows on soybeans. Now, natural gas, now negative. This is why I don't chase these things. Natural gas is now negative. This thing was up 3% earlier. At least Boyle was. This may have been up about 2.5%. And we're coming in on pretty heavy volume. Wow, what a bloodbath. Here's the lower high. Bam. All right, so let's let that settle out. Cocktails in November will be great. Yeah, I may have to push on. Normally I would, but I put on more weight than I thought I did, and I've been traveling quite a bit, and that doesn't help. I haven't been going to the gym, so I'm back in the gym. I'm going to be going there again in a few minutes, and if I get to where I want to be, 185 is not a hard number in the sand because I'm looking to put on mass as well, muscle as well. So a range of 185, 187. I'm supposed to be down at like 178 if I was just not working out. That would be my normal weight, but I would look gaunt. I know that for a fact. 185 is usually the number that I look right at. So, give or take a couple of pounds. So if I get there before November 1, great. But I really want to make the push to get down to that level and start the new year off right. Okay, so we'll keep an eye on natty gas. Palladium, we have a position in here. Strong price action up over 2%. On the 4-hour chart, we're trading above the 21 period EMA. Good stuff. Now, last look, silver was giving us a rip your face off rally. And it's bounced back here a little bit off of its highs. And it's weakening up. So that tells me I got to take a look at the dollar. Something's happening out there with the dollar. Not that that really influences the price of natural gas at all. Yeah, the dollar's ripping up higher here, up nearly a percentage point. So let's check in with gold. Gold down over a half percentage point. Let's go to the mining stocks. Mining stocks. Nugget, this is a leveraged product. It's only down 21 cents, so not a big move. But, you know, looking at this chart from a 4-hour perspective, we're breaking down. You know, this bar will close at 1 p.m. Eastern Standard Time. So, you know, maybe we rally back for all I know. But as it stands right now, gold mining stocks is measured by NUGT coming under pressure. Set up a couple of alerts here. And I'm not a day trader really, so that's why I use the 4-hour chart. Boeing we're positioned in. They had a good day yesterday. I'm liking this chart. I got to tell you, while it's down, you know, I got to read between the lines here a little bit in that we have pardon me, I'm just checking my other feeds here. Okay. So we have a inverted head and shoulders setup potentially forming here on Boeing. Left shoulder, head, right shoulder. I want to know if we begin to break out. I don't want to buy on weakness. I want to buy on strength. We have a, no, we don't. We don't have a squeeze set up here. All right, let's move on. Let's go back to the intraday charts. Let's go to a 15-minute view and check in with the equity markets. S&Ps are still down on the session. Now, we have a short position on the QQQ. We'll bring up the NQ. And while we are now positive on the session, they're desperately trying to hold 20,000. That's a big fat round number. So while we have a short position on the Qs, we also have a hedge on that position using TQQQ. So while we're still net short of the Qs, I'm ready to take that hedge off if we break down below the day's lows. You're not going to see my stop loss order on here. It's on a different platform. That's my investment portfolio. So I don't share that. So if we break down to new lower lows on the day on the triple Qs or the TQQQ, that will stop me out of any longs that we have on the Qs. And if we close ugly on the session, I could quite possibly be adding to that position. You know, the why is that we have this dock workers strike, and I haven't checked the news. For all I know, it's been resolved. And we have the flare-ups in the Middle East, and that's all inflationary. We'll go to oil in a moment. That's all inflationary. Yen craters as Japan gives another further rate hikes. Carry trade is back with a bang. All right, so they're manipulating the currency markets. The poor Japanese are going to suffer from more inflation. Tesla shares dip. Let's see what's going on over in Tesla. Getting crushed. And this is going to drag down the XLY. XLY down over a percentage point. I may be shorting this as soon as today. We have lower highs. We have lower lows. So XLY, remember Tesla is a major component of the XLY. Yeah, I'm not seeing any news on the dock workers strike. I can tell you this right now. I'm going to drag this over so you can see that the yield curve is steepening today. We're down on the week by 7 bips as of last night. But looking at this, we have the 2-year up 0.024, while the 10-year is up 0.063, wiping out a lot of the pullback we've seen so far on the yield curve this week. So I'm going to keep an eye out for new monthly and quarterly higher highs on the yield curve. Let's check in with some other charts here. Here's the small caps. They're down. The KRE got hammered yesterday. This is the regional bank index. You got to have your regional banks to rally along with the biotechs to get the small caps moving. Now, the other problem for the small caps is that yields are moving up higher. That's no bueno for the small caps. So while small caps tend to outperform 6 months after a rate cut, and frankly, they turned around this morning before the mega cap names did. You need to have lower yields, and it's what happens within that 6 months. We already went down a half basis point. You take a look at the Fed Watch tool, and this dock worker strike is causing traders to expect only a quarter basis point cut. I don't think it's enough to get the small caps going between now and the next major rate cut, a crisis in the market. So I'm not bullish on the small caps as it stands. If they break out, then I change my mind. Bullish percent index coming in here. So a lot of that optimism that we had out there is coming in somewhat. Rising yields, lower tips, no great shock. Also, dollar, new daily higher high. That's going to cause a problem short term for the mining stocks. So far in the day, bearish reversal bar, GDXJ. Nugget was up, now down, possible lower high. So I would just watch these names. If you're holding them, I would hold them. I'm holding them. But I wouldn't be a buyer right now on this pullback. Let's check in with a lot of these names are reporting soon, so I'm not going to do anything with them. Tesla off its lows. Netflix. Who's Netflix? Netflix is just hanging in there. This is one of the first QQQ, Mag 7 names to report. In fact, it is the first. So I wouldn't do anything with this stock in front of earnings. Checking in with the oil stocks today. They had a great day yesterday. And they're off the highs of the session. I think we need to pull back and retest the breakout point. Checking in with oil. Oil is up nearly a percentage point, but off the highs of the session. So it seems to be not much news. Something just fired off here. Nugget is out. So Nugget just put in, that's a gold mining ETF leverage product. Nugget just put in lower lows on the session. So be careful here. Boeing's still down. I think we went through it all. Let's check in with volatility. Volatility coming in. NASDAQ off of its highs. It rallied back. Let's bring this back up here. This is the MNQ. This is the mini product. So to me, you know, this is not good. You know, maybe we break out. But I'll tell you, this is why I put my stop right below the lows of the day. If we take out today's lows, I think that we're going measurably lower on the trip Qs. This is the NQ, but it's the mini product of the triple Qs in the futures market. So be careful here, folks. Be very, very careful. I'm not overly confident that we're going to hold these gains with all of the stuff, all of the geopolitical risk that's going on out there. So you have rising inflationary products such as oil. Even natty gas is up, except it pulled back on the day so far, but it's probably going to rally back at some point in time this week. The dock workers strike, purely inflationary. As long as it goes on, you could begin. If it goes on for more than 2 weeks, you could probably expect the Federal Reserve rate cut. Gone, because it's inflationary. You're going to have a disruption of a supply chain. Shipping prices are going to go up. Commodity prices should go up for those products that are not containerized, like wheat and corn. Those are containerized. Those could last. Soybeans, not so much so. Checking back in fact, with soybeans. We'll make this the last chart. Yeah, we're doing well with this. As mentioned earlier, we put on a long trade only minutes before we went live, and we're looking pretty good here. So we bought the dip. Here's the reason why, right? Sold it off overnight. We did not buy strength. What we did is waited, rally, pull back. Here's your pivot point. We rally above this line in now green. It's going to be game on to the long side. So right now it's consolidating, W formation. We're looking for the breakout. And that's it, folks. I will talk to you later on. Let me make sure I don't have any comments to go over. Nada. Good stuff. Thanks for being here. I'll talk to you later. Be well.